Kuroda now knows who his successor is going to be, and there may well be a temptation to ease the transition into a new regime. And one way to do that is to diffuse the market pressure that's been building. Because here's the problem. If you are the new governor, your first policy decision is at the end of April, you've got a dilemma because you want to normalize policy, but you can't really do it without creating a major disturbance because the market pressure is already quite severe. So you cannot offer guidance about what you intend to do without aggravating that market pressure even more. So every policy maneuver the new governor executes will have to be a surprise.
What will happen in the March policy, you think?
My base case is nothing happens. Kuroda does a lap of honour, victory lap after 10 years in the job, and puts the gearbox, if you like, into neutral, passes the keys to his successor. But I do agree that there is a significant risk that he might just make that one last manoeuvre, the master of surprise himself, as he's walking out the door, and again, all designed to make life easier for his successor.
Make life easier for his successor. What would that mean for the yen then, from a range perspective?
Yeah, it would definitely be dollar-yen negative, so it would be good for the yen. We have to keep in mind, though, that there's two big forces acting on dollar-yen right now. One is what happens at the BOJ. The second is what's happening at the Fed. And if there's ever a competition for influence over dollar-yen between the activities of both central banks, the Fed almost always wins out. So right now, the prospect of a tighter Fed for longer is driving dollar-yen higher, despite the background noise around what the BOJ might do and what this BOJ transition might do to policy settings in Japan.
But do you think by the end of this year they would normalize, that they would use the term that we are exiting easy monetary policy? Because, you know, that's lacked in their communication.
Yeah, so there's reluctance to use that term, but I think the facts will speak for themselves. If we see YCC being retired, and I think there's a very good chance that the 10-year cap on JGB yields, for example, will be gone by the end of this year. The question around negative rates is more nuanced. I think that will also disappear, but it might take a bit longer. It'll be a step-by-step process. And as I said, every single adjustment will create a very pronounced market reaction because it will inevitably have to be a surprise.
Okay, finally, Gareth, I'm running out of time. What's your favorite currency trade this year?
I like euro dollar. It's very liquid.
110, you said?
Yeah, 110, up to 110. But we could start to see, once the US recession really kicks in and the data confirms this, we could start to see euro dollar falling again later in the year. So it's very liquid. We've seen huge moves in what should be a pretty stable pair. And that, to me, creates trading opportunities.
So now to the mid part of the year, 110 on the euro.
Yes, exactly right. The other one to watch is Aussie-US. Aussie is still too strong, despite the falls that we've seen in the last 2 weeks. Aussie to 66 cents, we think, by June, so pretty soon.